We might be in a recession, but you sure wouldn't know it by corporate earnings. Apple, Amazon, etc., all posting really good numbers. Coming up here in the jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 6:36 here in the middle part of the country on Friday. It is July 29th. 2022. Here's your morning jog around the economic headlines of the world. I want to start off here in the U.S., go over some earnings from yesterday after the bell, and Amazon crushed it, up 12%. You've got Apple up a little bit on better than expected smartphone revenue. Boy, if we are in a recession, it's not that bad. Here's a thing, folks. Markets forward looking. One of the best Julys on record after one of the worst Junes on record. We're really having one of those garden variety, normal, very placid recessions, bear markets, what have you. Normally takes about 18 to 24 months to recover from those kinds of bad markets. Guess what? Typically, we recommend having somewhere around 5 years of your withdrawals, if you're withdrawing from a portfolio, in safe haven assets like bonds and cash to get you through these bad times in the market and wait for markets to recover higher. If that's not part of your long-term strategy and you have withdrawals that are coming out of markets as they're at bad prices, that's a strategic mistake. It's not really the market's fault as a long-term, because it's not just Apple and it's not just Amazon that are doing well. It's not just Chipotle, right? It's not just all high tech that's doing really well. Chevron, Exxon, right? The energy prices are high. We've seen gas prices elevated a little bit, right? They're having record quarters too. And of course, they're now a much smaller part of most portfolios as energy has fallen to, some single digit part of the S&P 500, but still all across the economy, companies are making really good money. And if you are an investor, that is certainly a good thing. One last thing I want to touch on in this very positive morning jog before I get you off to a nice weekend. I certainly hope you guys have some good weather where you are. The Eurozone, right? We always talk about Europe doing much worse than the U.S. in sort of total. Well, they actually grew in Q2. We just got some preliminary data, and they had almost 1% growth. Of course, the U.S. had 2 consecutive quarters of GDP decline, so we're technically in a recession now. The U.S. had been growing much faster than the Eurozone before Q1 and Q2 of this year. So it makes sense, right? If there's more volatility there, if the U.S. is growing at a faster rate, it has a higher hurdle to clear if there's more growth, right? Just basic fundamental math there. Even in Europe, with possibly the worst lefty policies that restrict business growth, they are seeing growth in their economy. This is why it pays to be a long-term investor, folks. This is why it pays to have some safe haven assets to dig into when markets get tough. Over time, the economy grows. Over time, investors do well. I had a client text me and then give me a call earlier this week. He said, Alex, one of my buddies, we were out taking a walk. He said, it's going to take 10 years to recover from this bear market. Folks, market's down 20%. As slow about a month ago. If you just get the dividend yield on the S&P 500, 1.7%, you're going to be whole in about 11, 12 years. If the economy grows even a little bit from there, you'd make it back. And we certainly think the market's going to do a lot better than that. So whenever you see crisis on TV and folks saying, oh, it just can't get any worse and this administration is really doing a bad job, that might be true. But American innovation and entrepreneurship around the world are undefeated. If you want some additional information throughout the week, throughout the weekend, feel free to find me online. I'm out there. Until then, hope you and your family have a really nice rest of your weekend. I'm out.